Welcome back, everybody, to the Voices for Blogging podcast, where we have Faces for Radio and Voices for Blogging. You can find us on the Podbean app, Apple Podcasts, or anywhere else you find your favorite podcasts. You can also find us on Instagram at Voices for Blogging. As always, in Los Angeles, California, there's Roy Samano, and here in Honolulu, Hawaii, this is Steve Lee. Today is May 12th. I'd like to say hi to all our listeners in New Zealand, Australia, Japan, the UK. Royce, we're growing, baby.
Wow, international audience.
No kidding. Thank you all for listening. So, a lot's happened, Royce, since the last time we recorded.
May 12th, the day after the big crypto crash.
Yeah, the big
Everything's
liquidation,
down.
big whatever we want to call it, right?
Everything's down 30, 40, 50% from all-time highs, maybe even more. And we have a special guest as well.
Yeah, we're gonna bring in the dragon, Ken Yeh, into this conversation soon. Royce, you want to share a little bit about some of your personal exploits, though, in the last few weeks? It's been an interesting last few weeks.
Personal exploits.
Yeah, you've been you've been home to Hawaii. You've been to Coachella.
I got COVID.
You got COVID. Apparently not related to Coachella, but still, it's one of those things.
Well, the jury is out. The jury is out on that, definitely for sure. But yeah, COVID it took a couple days. Definitely flu-like, except for the big headache. But Tylenol saved me.
Yeah, so otherwise
Definitely something you want to have on hand.
All good, feeling good though, no problems.
Oh yeah, I'm feeling good now. Just that I haven't worked out in like 2 weeks, 2.5 weeks, and I got the double whammy. So I'm feeling it now.
Oh yeah, that's all right, man. Way to get back to it, though.
Trying.
All right. Well, let's get back to the probably the biggest reason for the episode tonight. We always talk about we're not here to give you financial advice. We're here just to share our ideas about things that are happening in for the financial world. In this case, the crypto world. We don't want to come across as just being cheerleaders or anything like that. We're just talking about what we see, how we see it, how we feel it. And a lot's been going on, like you indicated. And let's take this moment then to bring in our guest, Ken Yeh.
Hey, what's up, guys?
What's going on?
Thanks for having me on. Again.
Thanks for being on, man. Again. for the manyth time.
By popular demand. What can I say?
Popular demand, dude.
Absolutely.
So have you been following this whole Terra Luna excitement, I guess?
Yeah, I've been following. It's hard. I think one of the hardest things to do when you're an investor is you tend to want to tune everything out when things are going down, right? Unless of course if you're short. But I mean, as a good investor, you have to stay tuned even when markets are down. Like as depressing as it is, watching a train wreck, it's still important to kind of keep on top of everything. So I've been trying to do that.
This thing has been like so awful. I've never seen an entire ecosystem just be destroyed in the matter of a couple of days. I mean, you read the posts on Twitter and the posts on Reddit, and it's so sad. Like people lost a ton of money.
Right.
But I think it was built to fail. I mean, it's not built like USDC or even Tether. There's an escrow with hard assets in again with Tether is a little bit different, but like USDC, that's built with US dollars and an escrow that contains mostly cash equivalents. But with stuff like Luna, a lot of their liquidity is backed by their token, or with UST, right? With Terra, US Terra is backed by their own token, and of course, if that token crashes, then all your security is gone. I mean, they talk about over collateralization, right, using their tokens, but that's only as good as how steady that collateral is, right? If it drops by 99%, which it did, right, then you're going to have like major problems, which is exactly what happened.
Yeah, I mean the problem, like I don't like algorithmic stablecoins, and it's not because I don't think that they can be successful. It's just that they're okay when things are working well. It's when things don't work well when you can have catastrophic failure, and that's kind of what happened here. It was basically a spiral. It was a downward spiral.
Yeah.
Because you're right. Like all the UST was backed by basically Luna tokens.
Right.
Okay, guys. Before you guys get deeper into your conversation, because you guys are gonna go off the deep end with some of this stuff, let's kind of simplify a little bit and let the audience know, especially the ones that are less experienced, know what you guys are talking about as far as if they haven't been following the Luna thing, they might be just holders of Bitcoin or Ethereum, and they're just seeing it dump and they don't understand what else is going on there. So essentially, what happened with Luna was we saw a protocol fail, and it's something where you're going to see some keywords, guys, where people are talking about stablecoin. And you've heard us talk on the show about stablecoin, but the stablecoin in Luna is a little different than the stablecoin that we've been talking about in the past, like USDC or Gemini Dollar. So can the two of you kind of encapsulate a little bit more about what you're talking about, how different the stablecoin was in Terra, and in more I don't want to say less technical terms, but in terms where the audience can kind of understand that this was a little different situation than something that goes on with USDC or Gemini Dollar.
Well, maybe we should step back a little bit more and just kind of talk about fiat currencies first, right? Like US dollar, the US dollar is backed by the US government, right? So, the Federal Reserve and the country, the sovereignty of the United States guarantees that dollar is, it's backed by the government. Right?
It's backed by a bunch of guns.
It used to be backed by gold. Remember, it was back in the
day. It used to be backed by gold.
It used to be gold, the gold standard, right? But it, of course, somewhere along the line, we switched and it was no longer backed by gold. But, when you look at cryptocurrencies and stablecoins, and you look at how those things are built, right? What's really backing a stablecoin like US Terra, right? UST, which is the token we're talking about, the token, created by, Luna, right? And if you look at what's actually backing that stablecoin, right? It's just Luna tokens. So, I mean, of course, there's other stuff in it, but it's really the belief that Luna tokens are the Luna organization, the tokens behind that stablecoin is viable, right? And it's over collateralized. So that's what they kind of sell you with that, right? You're like, oh, you know what? Based on the current price of Luna, this, the price of Luna could drop like 99% and we'll still be fine, right? The peg will still be maintained. And of course, as you saw what happened, Luna tokens dumped, I don't know how many percent, but like, is it 99%? Something like that.
It's 99.9%. But the reason for that is that they're printing a ton of Luna now. Like there's like 3 trillion, I think, right now.
Oh my goodness.
That have been that are in circulation or whatever, and they continue to print more Luna to try to get the peg back to $1.
Yeah, but, I mean, it's inflationary, and I mean we've seen, this isn't the first time we've seen this type of stablecoin. I think Royce mentioned the algorithmic stablecoin, where an algorithm kicks in when the stablecoin loses the dollar peg, right? In this case, stablecoins are pegged to $1. So whenever it goes below $1, the protocol sells Luna tokens in order to compensate, right, for to put more dollars into the peg so that it maintains the 1-1 ratio. And I think in this case, it just spiraled out of control to a point where it just became worthless.
So can you compare that to how, let's say, USDC or Gemini Dollar keeps theirs in line with the US dollar?
Well, it's
so it doesn't lose its peg.
Right. So when you put $1 into like USDC, they take your dollar and they give you 1 USDC. And that $1 stays in their escrow. So when someone redeems a USDC for your dollar, you get that dollar back from the escrow. that's in theory how that type of stablecoin works, like USDC, Gemini dollars. There's an escrow that kind of holds the assets that you put in to get that token in, and then you can burn that token and get that dollar back, right? Of course, it's a little bit more complicated because in these escrows, these like for example USDC and Gemini dollar, they don't like keeping their, like when you put a dollar in, they don't like to keep it in the form of a dollar because the dollar doesn't bear any interest. So it's kind of depreciating in a way because of inflation and so forth. So in order to I guess to maintain the dollar's value, they try to invest it by buying stuff like the U.S. Very very usually very stable type of investments like U.S. Treasuries, 30-year Treasuries, things like that. Maybe they'll buy like mutual funds, like very very large cap mutual funds. So when you look at the escrow, like at USDC, for example, like Coinbase, they get audited, right? They're supposed to be audited by different auditors to make sure that the stuff inside their escrow is good stuff, right? Like dollars, maybe treasuries, maybe municipal bonds, stuff that bear interest that are low risk but stable, right? And and so like when they look at that, they go, okay, we're good because there's a good amount of cash in there. So if you want to redeem, there's enough cash in escrow for you to redeem even large amounts of money. And if ever they needed more money, they can always sell those treasuries and get pretty much what they paid for it back, right? Except it's bearing interest, so they'd rather have an interest-bearing asset in the escrow. But in the case of like US Terra, they don't have that kind of functionality. It's just faith. It's backed by faith in Luna tokens. That
it's back. So it's back. Essentially, it's backed by a cryptocurrency whose value can vary a lot more than if you were just pegged to the U.S. dollar itself.
Right.
Yeah, it's backed by a volatile asset, right?
Correct.
And it tries to maintain its peg to the U.S. dollar by a burning and minting process usually.
Correct.
But it's all done via code.
Yeah. So it's a different mechanism. It failed obviously, and it has continued to fail, as Royce mentioned. It's down 99.9%. I mean, it's done. There is no hope of coming back, is there?
I think the reputational damage is done. They're trying to now define a path forward by minting a new coin and distributing that new coin versus people that, to people that, held Luna at the time before the crash or had UST or whatever it is. But I think it's going to be hard to come back from that reputational damage. The other thing is that there were a ton of other apps that were built on this platform, and they're all down 70, 80, 90% from their previous price as well. And
can you name which one those are? Can you kind of point out which one those are?
You can look on the website, but like Anchor Protocol is probably one of the bigger ones that's known.
Okay.
Hey Royce,
yeah.
So there's another big stablecoin, and I don't, Magic Internet Money, right? Which is kind of an algorithmic stablecoin as well. So their peg is fine. They're still at $1. They're still doing okay. What's your take on that, Royce? I'm kind of curious what you think of MIM versus Terra. Like, why do you think MIM kept its peg during this crazy wild ride, but Terra didn't?
So I don't really know the details behind MIM that well. I haven't really looked into it that much. I don't know if there's been like a massive run on MIM that I can think of in the past, other than that, maybe during that whole time fiasco. So like the only algorithmic stablecoin that I'm more knowledgeable about is actually DAI. So DAI follows kind of like a similar yeah. It's like a similar mechanism. They actually have a community that votes on I guess quote unquote safe assets to keep in their treasury to mint DAI. But the way that DAI works is that you put in your collateral, right? Say ETH, and I think you can mint DAI up to like 60% of it or 66%, somewhere around there, depending on what the community defines. And basically, when your collateral goes down in value to some threshold, you either have to put in more collateral, pay the DAI back, or you get liquidated.
Right. The
Yeah.
difference between Luna and DAI is that DAI is based on Ethereum, and US Terra is based on Luna. And as you can see, when you have such a volatile asset like Luna, which could crash from like $600 to like less than a penny, the likelihood of something like that happening to Ethereum is much lower. Now, we've seen some crazy wild swings with Ethereum too, but nothing like this.
We absolutely have it. I want to make sure everyone understands. We're not making light. If you guys were, if anyone listening right now was in at Ethereum, let's say at 3,500, and you saw it plummet by half, essentially at the low yesterday. I mean, as we speak right now, Ethereum's back up to about 2,100. It's starting to find some footing. Hopefully, this is where it's going to kind of start its move back up. But you're right, Ken. I mean, it's different because it's an asset that has a little more backing, a little more strength, it seems. But it is still a very volatile asset. I just want to make sure I point that out to our audience. And we're not saying like it's some kind of, it's not a sure thing. It's still not the same as pegging it against the US dollar.
You could still have people, freaking out, and it's happened to DAI in the past too. It's not like it hasn't happened to DAI. But it's interesting that this whole freak out with UST, I don't know if people got confused with Tether being UST or not, but there was also a freak out in USDT too, where people were trying to get out of Tether, going to like DAI and USDC, and it actually caused the Tether peg to drop below $1 for a little while too.
Interesting observation about kind of like the different types of stable coins. What I've seen and what you've seen as well is, these algorithmic stable coins don't work. I mean, look at Fei and Iron, right? There was another stable coin called Fei, which again, that was a pretty horrible situation as well, where just it lost its peg and lots of people lost money. But like I said, going back to MIM, Magic Internet Money, their protocol, again, this is another type of stablecoin that's pretty common, is that they're collateral based, right? So if you, for example, you can put in collateral like Ethereum into MIM, and you can mint MIM based on the amount of Ethereum you put in, right? And they maintain a certain threshold, like 50% liquidation ratio or collateralization ratio. So if it drops by 50%, you can liquidate it, right? So in those kinds of stable coins, I think maybe it works okay, because the bulk of MIM's collaterals are pretty high. I guess they're fairly high quality because the peg hasn't really dropped, even during this wild swing. Whereas like something algorithmic like Luna, the cascading effect is disastrous. So I think that's what I'm seeing here, is like you're seeing a very large stable coin. MIM is very, very big. It's multi-billion dollars. And I think that's probably the biggest difference, is the underlying collateral that's kind of backing these coins is really what separates a quality stablecoin versus a non-quality stablecoin.
I don't know if I'd use the word quality, but I mean, I definitely think that it makes a difference, what's backing it.
Well, just learning how to decipher, right? I think digging into it a little bit more. This was a good opportunity to kind of show everybody not all stable coins are built the same way, and do your homework.
Yeah,
do your homework.
Like Roy said, avoid the algorithmic ones, and maybe stay close to the ones with hard assets backing it, like USDC, maybe Tether, maybe Gemini. I don't know about Tether because I guess it's questionable what is in the escrow.
Yeah,
right?
That one's a little.
I don't know about Tether, but like Gemini dollar is probably good.
Yeah.
But you know what? If Tether is not backed very well, then that's a whole big systemic problem right there.
Oh gosh, yeah.
Mm-hmm.
For all of crypto.
It is. Emotionally, you guys got way more in this market than I do. Emotionally, can you guys share a little bit your experience in this last week to 2 weeks to last 3 months or so?
I think Royce and I are battle tested, man. We've been in this long enough to see a lot of different swings. Back in 2017, 2018, there was a massive crash, and it was painful, but we've seen how bad things can get. So when times are good, it's great, and when times are bad, it's like this. It's like chaos. But I think you just kind of hold on, just to you try to stay calm and make good decisions based on what you believe, because the underlying assumptions that you make don't really change overnight. I mean, crypto prices could drop 50% overnight, but if your conviction and your belief in what you've purchased, if this is an investment, then you can't look at it the way that you would look at like trading, day trading, for example. If you're just trading this thing, then of course this is very different. But I think Royce and I are kind of like the mindset of investing in this.
Royce, what say you?
I would say that in the last 2 years, it's been very different because for the most part, crypto and really, I guess any other asset has, other than March 2020, has pretty much gone up. There haven't been many big drawdowns like before in like 2018. Even in 2017, crypto, 2016, like you would see days where crypto could be down 30% on any given asset. And there were tons of days where you look across the board and everything's red, everything's down 30%, 40%. And I was telling Ken that it's been so long since I've seen a day like that in crypto recently that I almost forgot that's the kind of stuff that used to happen all the time. But it still sucks when it does happen. It's still, there's still a lot of people that are hurting from it. And that, I think, to me, that's the one takeaway from this, is that, I guess similar to 2017 too, when things started getting, really popular, or, prices started going up, you saw a lot of people with a lot of hubris and like Wen Lambo and all this stuff. And I feel like this cycle, it was the same thing over again. There are a lot of people that were really cocky or arrogant even. And, people were looking at the Terra founder too, this guy, Do Kwon. His Twitter timeline was full of kind of like little snide remarks or, even arrogant kinds of remarks. And now I don't think it's the time for that kind of stuff. Like, I think it's important to realize that, like, at the end of the day, like all these people on Twitter and all these people that are going through this stuff, like they're all people, and there are people they're hurting out there right now.
Yeah, I think my perspective is going to be probably pretty similar to a lot of the people, or closer to kind of what other people that are listening to this podcast are going through. My guess is that we got some people listening that are just trying to learn a little bit about the market. The only thing I can speak for myself is when I watched this and I saw this coming down, I mean, in that sense, I felt very the same way as you guys did. The whole reason why I got into this market was I believe this market's going to hold. I believe this market's going to be here for the long run. And I very much have a long-term perspective on things. And because of my experience in investing in everything else, like look at the stock market, for example. If I had to draw an analogy to the drop we just felt right now, when I watch things like Curve just dump below $1 at some point in time, and just see these levels just drop. It's one of those things where this almost reminds me of when we had the housing crisis and the stock market crash that came with it, where we had this crazy whipsaw action for over a 2 to 3 day span as people got washed out, weekends got washed out, people got margin calls, all these type of things that come in. And, we were texting today, the three of us, where I mentioned an article about Bill Miller, who was just a longtime Wall Street investor. He got margin called on his Bitcoin, and he got called out, and he had to cover his calls. And we were talking about the leverage that people have on cryptos, but always keeping in mind that places like hedge funds and all these other types of investors, everything they do is on leverage. So it's just one of these things where when a price collapses, people get called out. It just is what it is. And it's funny how I think this whole time things were going down, I never felt a sense of panic. I just kind of sat there and like, well, like last time we felt something like this, it was a time to buy. And like any other time in any other asset, when we buy low, it stinks. But, everyone's got to do your homework and decide what you want to do with this. You can just hold on for dear life and hope this is coming back, or you look at this as an opportunity, or you look at this as a way to just get out of the market. What do you guys think?
When the tide goes out, you see who's swimming naked. That's what I think about that margin thing, dude.
It's really
It's
just
Warren Buffett.
I mean, it's people shake out weekends, right? It's just how strong do you believe in this crypto, investment thesis, right? And I have a really good friend who bought Bitcoin at like $1, less than $1, and he put like a ton of money in it, and to this day he hasn't sold, to my knowledge at least, hasn't sold any of his Bitcoins. And this was probably back in 2010, around that time.
That's a dozen years ago. That's not even that long ago.
Yeah, he hasn't sold a single Bitcoin, according as far as I know. I don't know for sure, but that's what he says, and I believe him. He's not the kind of person who brags about that kind of stuff. But yeah, I mean, and so if he had sold at any point where it dipped or dropped, he wouldn't have nearly as much money as he has now, because during those 12 years, there's been like tons of crap. I mean, we're talking about like the Mt. Gox. We're talking about the 2017 crazy 18 dumps, and he just said, you know what, it is what it is. I mean, and he believes in this thing so much that he's like, you know what, it's just noise to him. So there's people like him, right, that just and like I said, if he played the swings like some people do, like I said, he would have sold a long time ago, and he probably sold like $50, and he wouldn't have whatever he has right now.
Yeah.
Well, I mean, the other way I look at this too is I look at a stock like, if I bring it to the stock market to bring an example, I look at a stock like Amazon. I had a cousin of mine who used Amazon as his thesis in his undergrad back in the 90s. For this is the stock to invest in because it's going to eventually be, if you guys remember what GE was like in the 90s, this is the next GE. He was just, he just kind of made his pitch for it. He actually invested in it at that time. And, he enjoyed the initial ride up. He sold out of it. And then ever since then, he's always talks about woulda, coulda, shoulda if he just held on. But I remind him that there were 2 more opportunities after the dot-com bubble burst where you could have got into Amazon at a very, very low level. If you truly believe in what you researched and what the thesis was behind that investment to begin with, you run with it and you decide to go. And, again, it isn't for the faint of heart. Like all these things that we do in investments, everything is to your comfort level, what you understand and what you believe. And, it's just such a big game of psychology that we kind of watch in all these markets, whether it's housing, whether it's stocks, whether it's cryptocurrency. Psychology is a big driver behind a lot of these things.
So let me share with you a little bit of what I think about kind of the long-term thesis of crypto, right? If you just ignore all the hype and noise and FUD, if you just look at the underlying system of crypto, for example, Bitcoin has an inflation rate of 1.77%. That's before the next halving. So in May of 2024, which is about, I don't know, like 19 months from now, or 23, less than 2 years from now, it's going to be half of that. It's going to be 0.9 or 0.8 something percent inflation. Now, that's a tenth of what we're facing right now in the U.S. economy.
Oh, absolutely. Yeah, absolutely.
If you look at that, just based on that, right, all things being equal, I mean, you've got one asset, dollars, which is, probably going to depreciate because the buying power of your dollar is going to go down by 8%, assuming inflation stays high, whereas your Bitcoin doesn't really, its inflation is 1.7%. It's going to keep going down. I think that in itself is really interesting. And that's why a lot of people got into Bitcoin, it was kind of like a hedge, against the inflation and how things are, going up in price and everything. I mean, and I think if you look at Ethereum, it's the same way, right? Ethereum's, their proof of stake, Ethereum 2.0, I think they're calling it the merge now, or Ethereum, the new Ethereum that's coming out. I think they're saying around August, September, whatever the next version of Ethereum will be. is going to decrease the inflation down to like less than 1%. So, if you just look at these assets, the expansion of the supply is very, like percentage-wise, very small compared to like, the inflation that's going on in the economy today. So I think that's really to me, it's a very compelling reason to invest, because if you invested in it, to me, it does feel like an inflation hedge, just because of the economics of those assets, how it functions.
Yeah. So speaking about Bitcoin, Ken, why don't you tell us about this friend that is very well known in Bitcoin circles?
So I was telling Royce the other day. I called him up. I was in the car and I said, Royce, I just found out I've met Satoshi Nakamoto. I have met him.
Oh, this is huge.
The king.
Huge.
I have. I know him. I know who he is, and I actually personally know who he is, and I met him.
Okay.
And so I think this was back in
Not yeah. No, sorry. Not only did you meet him, but
he was my coworker.
Go on.
He was my coworker. I worked with him. So in 1997 to 99, I worked at a company called Nortel Networks, and my older brother and I my older brother was already there. He's the one that introduced me to the company, and I joined right after I got out of college, and we carpooled with this guy in Temple City. So because Nortel was in Simi Valley, so it was a very long drive. So it was like a 15-mile drive each way. So we carpooled with Dorian.
Satoshi
Nakamoto. So he's like a kind of a goofy guy, definitely peculiar. It wasn't super like social or but he was cool. I mean, I we got along. We had nice car rides where we talked, and he's older than me or my brother at the time, and we carpooled a couple times a week. So it was pretty wild because like when I found out much later, I'm like, hey, wait a minute, I know that guy. He looks so familiar. I'm like, finally I saw a picture of him, and I'm like, oh my gosh, I think I know that guy. I talked to my brother, and then I found out some more stories about him. He actually tried dating my sister-in-law. So my my sister-in-law used to work at Nortel as well. That's where they met. And he was telling me that he tried to ask her out at the company. He was divorced, but he was interested in my brother's wife, who's he was Japanese, and my sister-in-law is also Japanese. And so he actually tried asking her out. I just thought it was pretty wild. Like, what are the chances I actually met Satoshi Nakamoto?
So just a little bit of background on that. Like back in, what was it, like 2013 or 2015? I think it was Newsweek came out with an article where you revealed the result of their investigation to find Satoshi Nakamoto, and the guy that they identified who was the inventor of Bitcoin was Dorian Satoshi Nakamoto from Temple City.
Oh my goodness!
So Ken knows
the man.
Allegedly.
I know the legend. I know I've met Satoshi Nakamoto. Well, he goes by Dorian. So I met Dorian.
You met Dorian.
I met Dorian.
Dorian, yes.
Dorian Nakamoto. I met him. We talked. We had these car rides. He was a very interesting guy. I think he lived with his mother at the time in his
cute.
It was interesting. It was like this, really interesting guy.
But just for the record, though, he denied being Satoshi Nakamoto.
Well, he has publicly denied it.
Yeah, he has publicly denied it.
At first, he confirmed it, and then I think he clarified later that, oh no, that's not what I meant. But I think at first, that's how that article got written, was because I think he accidentally or maybe mistakenly confirmed that he was Satoshi.
Yeah, something like that. They asked him like, "Hey, are you the inventor of some product?" And he said, like, "Yeah, but he can't talk about it anymore." Something like that.
So wait. So on that note, Ken, is this the last time we're ever going to hear from you or see you? Then, if you're outing him, like, are you going to get taken out at some point in time if he's just keeping this a secret?
I don't think so, man. I don't think so. Funny story with Satoshi as well, like with Dorian. is that I think one of the guys that was linked to Bitcoin, like being Satoshi, was Hal Finney, who also lived in Temple City, which I found fascinating. Two guys that were suspected of being Satoshi both lived in the same city. Like, what are the odds of that happening, right? and Temple City's not a big city. It's a pretty small. It's like a little city. It's not huge, not like New York City or anything. So
yeah, I didn't realize Hal Finney lived in Temple City.
Yeah. So they lived close, and so that's where I thought, if Hal Finney really did know Satoshi or did know Dorian, maybe he used his name to create it. They might have been linked there. I just thought that was really fascinating. That guys. Yeah. I mean, what are the odds? A name Satoshi and the guy who also, personally, I think my like conspiracy theory is that I think Hal Finney he probably is Satoshi. He probably created. He passed, but I think he probably mailed the private key to his wallet to his daughter or something like that. maybe in like 50 years, he'll get a letter or something in the future. Like, hey, here's the passphrase or the key, the private key to the wallet. Like, who knows?
Who knows? Maybe one day we'll find out.
Yeah.
Well, that's a pretty cool story, Ken. I mean, I think during such a turbulent time in the market, and people looking for answers, the people wondering what to do, I think that's a great way to end this episode here. Final thoughts, though, Ken. We'll start with you. Anything that you want to say? Any other thoughts you want to say before we sign out here?
I think if there's people who are panicking and scared, or one of the most important things with investing is not to make emotional decisions. And when you're emotional or, scared or, not thinking straight because things are just crashing, the person, human instinct kicks in and you just start reacting and you start making, decisions like, let me just dump everything. Right. And that's a really bad way to make a decision. So, to those who are going through this kind of wild ride, just take a step back, take a deep breath, make a rational decision, make a decision that makes sense to you in your situation. Don't just go and react, because that's how people make mistakes. So, I'm not saying that ultimately you might make the same decision still, but it's always good to kind of take a step back, take a deep breath, clear your mind, and then look at it objectively, and then see what you would do then. So that's kind of my advice to people who are investing today, and especially in cryptos, because it's pretty wild.
Royce?
Yeah. I just want to say that, there's always opportunities. There'll be opportunities today, there'll be opportunities tomorrow. So it's never like there won't be, another opportunity to, make money back or, anything like that. The other thing I want to say is thank you to all our listeners all around the world. I hope you get some entertainment or some usefulness out of this podcast.
And if you guys wanted more details on the Satoshi story, just let me know, man. I can give you some more juice.
Hey,
story. I've got.
Hey, right. Drive. You guys. You know what? We have an Instagram page. You guys got questions? Just DM us those questions. We'll bring Ken Yeh back on to address these questions. Who knows?
100% true story, though. I'm not making this up. Really,
his buddy Dorian.
My buddy Dorian. I wouldn't say buddy, but I did meet him before.
And and this may be the last time you guys hear of Ken, so it's okay.
Let's not get that far. Right? It's funny.
Okay, well, thanks again for listening, everybody. We're gonna try to get out here a little more regularly. We talked about at the beginning of the year here, and this is our effort to do that. So thanks again for listening.
Thanks, everyone.
Thanks for having me.